You've probably been feeling it, right? That little sense of unease about the economy, about the stock market, and, well, what's coming next. Today, we're going to connect the dots. We'll look at the AI stock frenzy, a massive mountain of government debt, and the one question on everyone's mind. Are we actually headed for a crash? Let's break down all the warning signs.
So this question, it is absolutely everywhere right now. You see it in the headlines. It's all over social media, and it's all being fueled by this talk of a huge AI bubble. But is that all it is? Just some irrational excitement? Or is it a big flashing red light for something much, much bigger? Okay, so to figure out if we're really in a bubble, we have to look back. Let's look at the last time a tech boom went spectacularly bust, the dot-com era. And yeah, the similarities are kind of unsettling, but believe it or not, it's the differences that really matter here. So check this out. This is the first major difference. The price-to-earnings ratio, which is basically just how much investors are willing to pay for $1 of a company's profit, was at a staggering 75x back in '99. Today, it's about half that. And get this, while the dot-com boom was fueled by companies with literally no profits, today's AI boom is led by absolute giants that are making money. So, on the surface, things look way more stable. And yet, you have legendary investors like Paul Tudor Jones saying, the feeling, the market psychology, is identical to 1999. He's warning that the biggest gains often happen in that final, frothy phase just before the top. It's a pretty chilling reminder that while the tech changes, human psychology, that mix of greed and fear, well, that often stays exactly the same.
And this is exactly why the whole debate over the AI bubble might be a complete and total distraction. The real danger isn't the shiny new thing that has everybody's attention. No, it's the cracking foundation that the entire market is built on.
And that brings us to the bedrock of this entire problem, a mountain of debt that is so large, it's honestly hard to even wrap your head around.
$35 trillion. That is the current U.S. national debt. Now, to put that into perspective for you, it's growing by about $1 trillion every 100 days. This forces the government into a cycle where it has to keep borrowing more and more money just to stay afloat.
This number right here really shows just how disconnected the market has become from reality. It comes from something called the Buffett indicator, and it basically weighs the entire stock market's value against the country's economic output, its GDP. A healthy, balanced score is around 100%. We are at 217%, an all-time high. It's a huge sign that stock prices are just completely outpacing the real economy that's supposed to support them.
This leads to a scenario that some economists are calling the death trap. It's this vicious cycle where the debt is so big that the government has to take on new debt just to pay the interest on the old debt. For the average person, what does that mean? Well, that pressure can translate into higher taxes, painful cuts to public services, or rising inflation that just eats away at your savings.
So you might be thinking, okay, $35 trillion is a crazy number, but how does that actually affect me? Well, it's not abstract at all. We are seeing the consequences play out right now, both here at home and on the world stage.
One of the most visible symptoms of this is political paralysis. I mean, the debt is so large that there are no easy answers, which just leads to gridlock. And when politicians can't agree on a budget, what do we get? A government shutdown, where parts of the government literally just stop working.
And as this timeline shows, these shutdowns aren't just one-off events anymore. They're becoming a chronic feature of our political landscape. They reflect a deeper inability to get the country's finances under control. And as we speak, we are already 10 days into the latest one.
This internal financial pressure also spills out onto the world stage. I mean, just today, we saw how fragile everything is. A threat of new tariffs on China led to immediate retaliation, and boom, the markets reacted instantly. Key tech stocks plummeted, and the major indexes all took a significant hit. This just goes to show how geopolitical tensions, often fueled by economic stress, can directly torpedo the market.
So, with this debt trap tightening and all the traditional tools failing, what's the way out? Well, some people are proposing a pretty radical, and I have to say, highly controversial, technological solution. The proposed plan is essentially a financial reset button. First, the government would create a digital dollar. Then it could convert all that existing debt, all those trillions in treasury bonds, into this new digital currency. This would give the Federal Reserve a brand new way to manage the economy, potentially breaking free from the old system and those crushing interest payments. But make no mistake about it, this is an incredibly high-stakes move. If global investors see this as some kind of default or a manipulation of the currency, it could absolutely shatter the trust that underpins the US dollar's status as the world's reserve currency. And that is the very foundation of America's economic power.
Which brings us right back to today. We have a stock market that feels like a bubble, and it's teetering on a foundation of unprecedented debt. It's facing political gridlock at home and trade wars abroad. So, what does the immediate future even look like?
Today's market sell-off is a perfect example of this fragility in action. The reaction to that tariff news was swift and it was brutal. It hit the tech sector, the very engine of the market's recent gains, the hardest. It's just a stark reminder of how quickly sentiment can turn sour when that weak foundation gets exposed.
So here it is, the most important takeaway from all of this. None of these issues is the real problem on its own. The real risk is the combination. Think of it like a building. The AI hype is this huge party on the top floor, but it's happening on a foundation of historic debt, while political gridlock and trade wars are literally shaking the very ground it's built on. That combination is what makes this moment so incredibly dangerous.
And that leaves us with one final critical question. For nearly a century, the entire global financial system has been built on the US dollar. With all of the pressures we've just talked about, we have to ask, what's going to define the next century? And is the transition going to be a smooth one?